Hello friends, welcome to this session. Let's have a look at these pictures. Friends, have you ever thought who pays the electricity bill for the street light? Who maintains these roads, gardens, schools? From where do the cops and soldiers who work for our safety get paid? And who is taking the responsibility of the hospitals where treatments are free or are done at a very low cost? Those scientific labs and scientists who are making new discoveries and research for our country. Just think that if these things were not there, just imagine a month without all of these. For proper functioning of these things, a huge amount is needed. But from where does the government get this money? How do they manage things? So here, tax comes into the picture. Now what exactly is this term tax? It is a small amount or contribution towards all the above said things which directly or indirectly come back to us. Taxes are collected by government from two modes. A tax that is directly paid by an individual or an organization on their income is called direct taxes. This tax collection is based on the ability to pay principal, which means higher income groups will pay more taxes. In the second case, every individual pay tax on the goods and services that they use. For example, buying any food item, electronics, vehicles, etc. The amount paid by us is the sum of the price of the product and tax applied on it. The same is applicable while using any services like staying in a hotel or traveling via plane. These taxes are not directly paid by the consumer to government, but are paid through the person who provides us these goods and services. Hence, it is called indirect taxes. Earlier, there were many taxes in this category. Excise duty, custom duty, octroi, entertainment tax, luxury tax, VAT, etc. And rates of all those taxes in different states were different. So to make the entire tax ratio equal in all these states, to make it one nation, one market, one tax, a historic step after 69 years of the independence of India was taken. And now onwards, there is only one tax in the category of indirect taxes in India called GST, Goods and Service Tax, with effect from 1st July 2017. India is not the only country having this system, but in many other developed countries, system of one tax already exists. So let's see the mechanism of GST and how it works. First of all, there are different GST slabs for different types of goods and services. And if we go to see in deep, things which are the basic necessities of a person comes under the slab of 0% GST. Means one does not have to pay any tax on those products or services. Raw foods and some other stuffs which are consumed by each and every one comes under the slab of 5%, and gradually from basics to luxurious goods and services, slab percentage increases and maximum GST paid is 28%. Also note one thing, that the percentage of GST collected is equally distributed amongst the state and central government, which is termed as SGST and CGST. Now let's take an example and see how GST is collected by the government on a product. A product before reaching the consumer undergoes different stages of distribution. Suppose a manufacturer is selling a wristwatch for Rs 200 to the wholesaler, where the cost of the wristwatch is 150 and 50 rupees is manufacturer's profit. Now, wholesaler sells the same wristwatch to the retailer, or you can say to the shopkeeper, for Rs 250, taking his profit of Rs 50. And a consumer purchases the same wristwatch from the retailer at Rs 300. So the profit to the retailer would be, yes, 50 rupees. Every mediator is making a profit of 50 rupees in this case, but it need not be the same. This is the flow chart before GST is applied. Now we'll add GST to all these transactions. The process is very simple. Just remember, GST is paid by a buyer to a seller and indirectly reaches the government via sellers. Okay? So let's understand it step by step with the same example. The GST on wristwatch is 12%. Now, manufacturer will collect 12% of 200 from the wholesaler and give it to government, which is 24 rupees. Wholesaler will collect GST of 12% of 250 from the retailer, which is rupees 30. Now he has already paid 24 rupees to the manufacturer, so he will be paying the remaining 6 rupees to the government. Are you getting it? Alright. Similarly, the retailer will collect GST from the consumer, that is 12% of 300, which is 36 rupees. And again, as he has already paid 30 rupees to wholesaler, remaining 6 rupees will be paid to government. This process or series of people involved in trading of a product is called GST in trading chain. An interesting thing that can be seen over here is the total GST received by the government is the GST paid by the consumer. So here we understood how GST is applied on a product that we purchase using a simple example of wristwatch. A similar logic can be applied to in case of services. Let's practice a simple question and check the understanding of the concept. Mr. Rahul purchased a product of rupees 2000 and sold it to Mr. Jay for rupees 3000. GST is 5%. Find the GST payable by Mr. Rahul. So here GST payable refers to the amount payable to the government. Okay? Now, Rahul may be any of the mediator. For example, he may be wholesaler or retailer. And he purchased it for rupees 2000 by paying 5% GST, which is 100 rupees. And now he sold it to Jay for rupees 3000. So he will be collecting a GST of 5% on 3000, which is 150 rupees. So the GST payable by Mr. Rahul will be rupees 50, right? So friends, here we end up this session. In the next session, we'll learn how a consumer calculates GST when some discount on the product or services is given. Also to calculate the taxable value, that means selling price of the product, when total amount of a product including GST is given. So meet you in the next session. Till then, keep watching, keep learning. Thank you.